Hello and welcome to another update video about ADA. ADA seems to be breaking out of this triangle pattern to the downside. It's a potential Elliott wave triangle. We've been talking about that in the last few days and weeks extensively. The E wave reached our target and the E wave might have topped. At the moment, I'm watching if a first 5-wave move to the downside can evolve, okay? At the moment, in my reading, we only have 3 waves down. I'd like to see one more low. So this is going to be a key decision level now, because if ADA cannot break below the last swing low, which is here the B wave low at $23.70, 23.7 cents, not $23. Now, if ADA cannot break below 23.7 cents, then we haven't got 5 waves and the risk of more choppy price action remains. So really, to get additional confirmation that this triangle pattern, which was intended or assumed to break out to the downside, to get further evidence that it has topped, we need to see the 5th wave highlighted here in yellow, 5th wave to the downside of circle wave 1. It would be exactly here where ADA would turn around if it wants to create more messy price action, okay? So we have to be on the lookout here. It's not guaranteed to come down from here. Micro counts are unreliable. They are more fragile, but this would be ideal to see a turn down from here. A break above the last swing high at 24.8 cents, however, would rather make this immediate downside outlook less reliable. And I would have to assume that we possibly just reset wave D of the triangle, that the triangle isn't broken. As I always say, there are 2 levels when you're dealing with an Elliott wave triangle that are relevant. The first one is the D wave. As soon as the D wave, well, top or bottom, depending on if we're talking about an uptrend or a downtrend, as soon as the D wave gets broken, basically, we have an indication that the triangle is breaking, but only really when it breaks beyond the B wave. That is really the confirmation, and we haven't done that at this stage. We see a few green candles from here, okay? Nothing too strong. I mean, the overall chart is pretty boring at the moment, the overall ADA chart. But yeah, I mean, this wave 4 certainly should stay below 24.8 cents to keep the downside pressure alive. We can also, in addition to that, add Fibonacci retracements, but again, bear in mind, we are really dealing with micro structures, but also that is pointing towards 24.6 cents, the 50% fib level. So it's pretty much aligned with the level I gave you. And then one more low should give us a 5th wave of circle wave 1. Then we could enter wave 2, a corrective rally again. Then a 3rd wave down, a 4th wave and a 5th wave. And we might get into the region around 15 to 20 cents. First of all, however, I would like to have the first 5-wave move down complete. We're getting closer and closer to support as it seems. So far, I haven't been able to break below the 23.7 cent level, but ideally the bears will take the lead here and do it. And I mean, overall, I gave you the micro resistance level. Even if we break above 23.7 cents, above 24.8, the level I gave you, it wouldn't be bullish. First of all, we would have to take out the E wave high at 26 cents. If you're wondering what is the level or the wave it is embedded in, this ABCDE triangle basically forms the last wave of a much larger triangle at the moment, which has been developing since December last year. So you can see here this very large triangle, and the triangle here in small could just be the last wave of that triangle. So the last wave of a triangle is the E wave, and E waves can be triangles. E waves can be all sorts of corrective patterns. So the other option would be a rally into resistance here between 30 and 34 cents, but that's far away. And due to the weakness at the moment on the chart, I'm watching this micro triangle. Yeah, not much more to add. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.